Test, test. Good morning, traders. It is Tuesday, the 23rd of December, 2014. It's 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. We just had a slew of numbers at 7:30. I'll cover those in a minute. Real quick rundown again, a new format. I'm not going to cover the overall news, just a synopsis and the key elements that might drive today or future activity. Equity markets open slightly higher, tracking U.S. gains with the second round of Greek presidential elections in focus. Markets pair gains amid soft Belgium CPI for December and UK Q3 GDP revision. Athens Stock Exchange lower by over 1.5%. Shanghai Composite declines by over 3%. UK listed mining shares trade mixed. France PM vols expresses concern that upcoming French jobless figures won't be good. Today's S&P fair value is at negative 5.00, negative 5.00, meaning the cash is higher than the futures by 5 points. And then the 7:30 numbers, Q3 final GDP analyzed came in at, this is Q on Q, came in at 5 versus 4.3%, so a big number, and we see a big move on that on the overnight session. Nice big pop. Personal consumption came in at 3.2% versus 2.5%, very strong. November durable goods orders, negative 0.7% versus plus 3%, so a big miss there. Durable X transports, negative 4% versus plus 1%. And Q3 final GDP price index, 1.4 in line. Core PCE Q on Q, 1.4 in line as well. Looking ahead, 25 minutes after the open at 8:55 Central, U.S. December final University of Michigan confidence, expecting 93.5, 93.8 was the prior, was the prelim. And then at 9, we have also a bunch of numbers. At 9, we have December Richmond Fed. It's a low priority number, expecting 8. New home sales for November, 460,000. Personal income 0.5%, PCE deflator negative 0.1%, and PCE core at 0.1%. 10:30 Treasury to sell 13 billion in 2-year floating rate notes reopening. At noon, Treasury to sell 35 billion in 5-year notes. And then, of course, after the close at 3:30, weekly API inventories, and so on. Tomorrow, as I said, covered yesterday, tomorrow we have initial and continuing claims, crude oil, nat gas, and the Bank of Japan meeting minutes. Thursday's a holiday, and Friday is a blank slate for economic releases. Let's look at what the market has done, what we expected it to do, and so on and so on. So, change my charts around a little bit. You might have noticed this chart up here on the top right. I got rid of the S&P tick. I did some more testing on it, and I found it not to be as responsive. The bands that you see here are express where the New York Stock Exchange tick represents is resting the bulk of the time. And the extremes of that. So this is one standard deviation. This is not centered on 0. It's slightly skewed downwards at negative 5. And then the one standard deviation is from 295 to negative 305. And then the second standard deviation, which you see here, us popping up above it yesterday briefly, second standard deviation is from plus 605 to negative 640. I have alerts set for when those are crossed. The bottom panel is the cumulative tick reading. Also on the right, I have the some of the major sectors represented. Dow Jones Transports is something I always watch, and then I have financials underneath that, technology and consumer discretionary. These three represent around 50% of the S&P 500 sectors. Let's look at what we did yesterday. What was expected yesterday was that we would open in range, out of value. The expectation was for responsive selling towards this 2066 with a potential of 2063. The expectation on the day overall was that we would have an inside day. There was a low probability of us breaking the high or the low of Friday's range. So the extent of the selling would be to 2066.75, and on a pretty decent push, 2063, I expected it to base down in here and then start moving back up through this thinner volume area and climbing with the intermediate and long-term trend. What actually happened is we had some responsive selling, and it stopped at value high, the prior day's value high, 2068.50, so about 2 points ahead of where it was expected, 1.5, 2 points ahead of where it was expected. And then we basically built a very tight and very balanced profile up in that range. Note here that the opening swing high and low, 73.50 to 68.50, were taken out by a tick on each side. Strong indication that the market has no higher time frame traders in it, and that it's a bunch of day traders clubbing each other over the head. And that's pretty much what we got for most of the session until later on. We did have a range extension up here and a pullback to the mid, and then an attempt at the high before sellers stepped in. Not a very eventful day, completely balanced, very Gaussian profile. 730,000 contracts traded on the day session. That's about half of what it normally does. We've seen the volume cut in half throughout the day. Tracking volume by time, we see that volume was just not there yesterday. You can see here the yellow lines represent the 20-day median, the yellow lines represent 20-day median, and you can see where the actual is, and you can see these tails all the way through, as opposed to prior days where you don't see tails at all. Volume just exceeding the 20-day median. So very quiet. Expect that to continue, probably get worse today. So again, the same theme as yesterday. It is not wise to get aggressive or to get pushy with your positions this week. It just there just aren't the participants there to support the volatility and price movement that gets us paid. Okay. Overall, what have we done? So again, balance, new highs on the 5th of December. We fall off, we sell off down to 1963. The world was coming to an end at this point. That's the perspective. However, the move down was only about 38% of the last swing up. Market finds buyers in this in the 70s, pushes through to 2000. 2014 was the key price, the over-under price in this area. We gap above it and shoot straight up to 2060, which is the balance from way back here. We take out the next day, we test below, could not find any selling interest, and so we turned up and pushed to 2076 quarter, which was the new high. The new high on the year. And then yesterday we just held basically the wick portion of that candle from Friday, and it's looking today like we are pushing for we've pushed for new highs, and we're pushing to hold those new highs. Overnight we opened right where we closed, a very sideways session for the Asian session, little selling in the European session on European numbers. Also sideways, a little pop at 6:45, the 6:30 number, the 6:30 time period, and then the GDP comes out and just blows this thing right up to 2084.50, and we're holding 2082.50 with about 20 minutes to go. So it's looking like we're likely to gap up. The overnight low is not so strong. It's got 3 taps on it here on the 15-minute with the point of control down here. The point of control is likely to shift up on further trading in that region. So point of control right now at 4,827 up here versus 6,366. So actually that doesn't look like we're going to shift this point of control up. It needs quite a bit. It needs another 15 or so, 1,500 contracts. Not likely to trade there. But we'll see if the point of control stays down here. It's going to act as an attraction. Again, I would expect responsive selling into the open on the open today. May not even test the overnight high, although if it tests the overnight high, it'll make things a little bit more interesting. But we're expecting the gap the gap zone to be filled here for a pushback into the most recent balance, which is down here in the 2070 2072 area. That's the key trade idea. We're opening out of range. I don't believe that OTF would be active today, especially this week. But there is the fact here that we are opening in a gap in all-time high territory. So the potential for an open drive meaning somebody comes in and buys at the opening print and keeps buying. You don't sell or fade an open drive up, and if that happens, I would caution the shorts. The more likely scenario is an open auction out of range. It'll trade both sides, and then we would have sellers taking over to balance the books. Overnight inventory is long, probably. So we're looking for the books to be balanced, so it should come back. It's likely to come back. Nothing should do anything. It's likely to come back into the 2076 area and push to 2072, which is only 10 points below. So that's the primary trade idea. The other idea, of course, is to open auction out of range, pull back a little bit responsive, find buyers, push higher, and then I have a confluence target. A confluence target at 2096. That's the key target above. I have 4 converging lines at 2096, 4 converging areas, and that would be the target for today. That only puts it up there by 14 points. Yesterday's range was 8 points, and that's it. Not expecting it to be much larger today, although it could push the normal range of 12 to 14 if since it is opening in a gap. Anyway, I'll leave you with that. As always, just make sure you stay patient and pick your spots today. This is a great week to get lost in the action, get emotional, and lose money here and there. It's death by 1,000 paper cuts. Just be careful. Good luck, and I'll catch you tomorrow. Take care.